Good morning. Welcome back. You're watching The China Show. Let's get to some other news this morning. So Starbucks is selling a majority stake in its China unit to private equity firm Boyu Capital. The price tag there, $4 billion. Now, the coffee chain shares rose in late trade after the announcement. You see that on your screens. Let's bring in our Asia Global Business Managing Editor, Rachel Chang, in our Hong Kong studios for us. Yeah, so Rachel, we've been tracking the ins and outs of the story, and finally we're here. Finally, we have a price tag. How did Boyu emerge as the winner here?
Right, exactly. So we broke the news last week, of course. There were a lot of bidders in this process, and Boyu really emerged as the winner because, first of all, it's a Chinese private equity firm, which means that its connections onshore is going to be that much stronger for Starbucks. We're already seeing that happening. We just broke another piece of news, which is that Boyu is going to be looking for over $1 billion in a leveraged loan from Chinese banks to finance this 60% stake. Boyu also recently closed a really big deal for China's biggest chain of luxury malls, SKP. That means that there's probably going to be a lot of synergies available for Starbucks outlets in those malls, for example. Ultimately, I think it was really that strategy and those Chinese mainland connections that helped Boyu beat out these other global PE firms that were very interested in a stake as well, because that's really what Starbucks has been missing in China.
Yeah, this coming out of time, they've been struggling for years now. Even Luckin has surpassed them in being the largest coffee chain there. So you are seeing these local, domestic, really winners emerge in all this. And this is really kind of the next chapter for Starbucks. What does it mean for them now?
Right, I think that's really the biggest question, because for a long time now, people have been pressuring Starbucks to say, look at you're getting beat by all these Chinese chains, the Luckin model, quick turnaround, low cost, smaller stores. But, Starbucks has been trying to hold quite firm to its idea that it's a different kind of business. It's premium. It's going to sell lattes at 3 times the price because it has these beautiful stores where people can hang out. So, I think what we're looking to next is whether that kind of model will really survive now that private equity is in charge. China is a very different type of industry, a different type of market where consumers are looking for different things. So, in a couple of years, Starbucks in China might be quite unrecognizable from what we know Starbucks elsewhere to be. Now we have a Chinese PE firm in charge, and we'll probably be looking to grow those margins very quickly.